Hello guys, welcome back again. Yassine again. We're here with you. So this time I want to give you real trades and finish up the second part of selling rules, the video that I made last time. Here we go. So I'm gonna give you one of my real trades actually that I've done, and I took a loss on them. Okay, so just to give you a real perspective of stop loss, because last time I mentioned the fact that if you can use only the moving averages, and as soon as the price drop and close below these moving averages, which are the 8 exponential, the 21, the 50, you just take a loss or take a profit. Okay, so starting with trade OBE, this is what I took. I purchased this stock actually when it broke out from this pivot right in here. So my initial stop was actually, even though, like you can see, if I take this out, let's take that 200 moving average out of the way. If you see right in here, actually there's some gap. Usually I do hate to buy when the stock like gaps. So I kept an eye on it. The stock actually went up sideways and held quite good. And then as soon as when it bounced here, I was like, okay, so that's gonna be my next selling point, because for me, and this again comes with experience, as soon as the stock behave certain way, you have to move your stop. You're not, especially if a stock moves up 2%, 3%, 5%, I mean, you're not gonna wait for the stock to come back and hit your stop loss. You're gonna have to move it. So I purchased a stock here, held pretty good, and then went up this day, and I said, okay, so now if this stock starting to close and or even play with the low of that candle, I'm gonna get out. And that's exactly what happened. It just came back, and my expectation was the stock was gonna go up, and just next day it surprised me, and I was like, okay, so and I'm assuming probably this day is like when the stock's starting to taking a hit. So that was my first loss. So I exited, and even though I was planning, even though that you can plan for the stock, sometimes let's say you have 5 or 7% loss rule, you don't have to take that 7% rule. If stock starting behaving a certain way, you can take that. You can exit way before, but you have to make sure you have to give the stock room to play. So for me, this right here, it was actually for me, as far as I'm concerned. Somebody else could probably left it alone, but for me, back in the days, back in the days I used to say oh, it's okay, that the stock that's still gonna go up. But then back then I was smoking opium, and unfortunately I don't smoke that no more. So I took my loss and I exited, and then you can see the price still actually was just going and staying below the 20. Now it's staying. It's actually, it was a good loss. So that's how I'm gonna leave it at that. Second stock that I trade actually that I took recently, and I think I mentioned it in one of my videos when I was doing some updates, is CSIQ. And this is one of my stocks that actually were holding pretty well. You can see the gap here, and the stock was taking a hit while the stock was going sideways. So I took my trade and I bought it right at the close on that day. And again, my stop loss was either the 21. My initial stop was the 21 moving average. So any close below the 21 moving average, like I preached before here, what I told you, I'm gonna get out. And again, like I said, I don't have to wait for that stock to close below the 21. I can take my stock before, but still, you want to give it room again. So I want to see the stock move up. That's my anticipation. So so I just bought you. That means you have to move up. You can't move against me. So next day when I saw this candle over here, I'm like, okay, that's not good. So you're already starting taking out the low of the candle that I already made my decision on. So basically, you want to look at it this way. So if we buy it here, okay, if a stock is going to act strong, you don't want to see it taking the day that we bought it, taking the low the day you bought it. That's weakness. So that's the first thing that has to come in mind. And this it did develop by time. It didn't just like a drink the juice and then it hit me. It takes time. So as soon as the stock did this, and you can see that it touches the 21 but didn't close below it, immediately I put my stop loss right below it. Because sometimes what happened, I noticed, and they will go through the during the day, they will penetrate that 21 moving average, and they will close like red, but next day they will pop right back up. So they will take some losses, and then that's why I usually most of the time I will wait for the stock to close to see what happened. Sometimes it will take 50% off the table, so you always want to manage your risk. And again, this is not a set rules, you have to develop your own. So I'm just giving you what I did through the trade. So as soon as this next day took the low of this candle, I put my stop loss right below the low of that candle. And actually this day took the low of that day. The low this day was 42.72. This one was 42.53. So it took me out. And as you can see, this, if I was still in it, I would still be at loss. So that was like, I will still be at what? I'll add another 6% loss to my original loss. And usually I do stick to 5% loss. I don't go more than 6 or 7, not more than that. So I become like more disciplined toward the 5%. And if the stock goes up, be my guest, I'll buy it again. Next trade I want to share with you, it was a recent one actually, Udemy. So it was a beautiful cup and handle, and I tweeted about it. Beautiful cup and handle. I was not convinced on the fundamentals. Well, fundamentals were not really that strong. Usually I do buy good technicals and good fundamentals, but the stock, you can't deny it. It was a good breakout, good volume, textbook, and I said okay. Next day it went up, it held pretty good, even though I was concerned actually with this candle. The stock starting acting okay for the next 2 days, and then next thing you know, it just took me like when it closed below the low of that candle, and I was out completely. So that was another good loss trade. Another one, which this one is a little bit different, DQ. This actually I'm still watching it. Has really good EPS earnings. You can see 3-digit in here, good EPS earnings. Even though on the sales you can see that revenue is 181%. I would recommend you watching this stock. It's really good. Anyway, this stock was not a breakout. It was, the stock was working on a base, and this stock was really acting really well. I didn't trade it before, but you can see it's working on this base here, and then it went up and it just started digesting here. So it's the right side of the handle. So when I jumped in right on this day, right in here, right on that green candle here, this one, and I said right before I bought it, I said if it takes any stock that's gonna, even though I said if any candle takes out that low, that candle, I'll get out. Even though you can say that instead of putting a stop loss right below that low, that candle, you can put it right in here, right below this area here. So that's basically a low, because you have a low here and then you have a low here. So or you have a low here. Well, actually this low didn't even exist before, so I'm sorry. So the stock was like let's say it was like just like that. That's when I bought it, it was like that. So I said taking out the low of that candle, I'm out. I'm expecting the stock to go up or at least consolidate here. Well, next thing you know, the stock did held a little bit, and even though I don't go in this situation, I don't go by the moving average. I want to see if the stock's gonna hold strong. I don't want it to close below a certain low. So again, this candle right here, it took out the low of that candle. And I was following it, even though I took a loss on it, small loss. I took a loss on it. It came back and it gapped. Look at that volume right there. And I was still like, I didn't want to jump in, so I want to see the break actually of that trend right in here. That's what I wanted to see. So I was just watching it. I was watching it, and then actually, I didn't trade it. I didn't buy it again. And I saw the stock that it actually did, this candle that did fill that gap. And I'm like, oh, that's not good. And then the stock is still like doing. So again, that was a good loss. The last one I want to share with you is called ODFL. This is, so I marked them so I won't forget. I was watching this stock, and I traded this stock back in here in this area. I made good money on it. I was watching it. I missed the good entry, which is here, and I bought it right when it was going through when it made a new low of the previous high on that 8 moving average. So I kept holding it, and the stock, this is where actually the stock market started taking a hit, and then it went all the way down, and it's starting to close below the 8 first day, second day. And I knew then, as soon as it started doing this and this, actually on the second day was a confirmation for me. I knew there was something's up with the stock. So I still gave it a chance, and then as soon as I saw it starting to close below the 21, that's when I said that's it, and I'm not gonna lose. So I'm pretty much like, well, not break even, but it's kind of like like it was like really small loss. I put my stop loss right below. It did gap a little bit next day, but it was good loss. So if I would have held it, you know, I would have been like 12%, 13% below the water. So again, these are my losses, and most of them, like I said, 5%. I think most of them were not even 5%, because like I said, I take my stops before that. So you always want to make good loss. And again, and I just showed you 1, 2, 3, 4, 5. So that's a 5. And assuming that I did take 5%, even though I didn't take 5% loss in all of them, I'm going to show you one of my trades. Even though I don't like to brag about what I trade and what I'm taking and profits, I don't like that. I just want to show you stocks that actually I'm still holding right now. And I'll show you, if you take a good risk management and if you let run good stocks and good profit run, they will cover other losses. So these actually some of the stocks that I did actually tweet about it, and I talked about it. XMTR, I'm up. This is as of today, so I'm up on it 14%, and PLMR, I'm up on it 11%. If you do the math, that's about 24%. So assuming that I did actually, took 5% loss on each one of them, so that's 25%. But again, you can see in 2 trades I'm up 24%, and I do have other trades actually, they're still open. I'm already up on them above 5% on each one of them. So again, cut your losses as small as possible. I did mention last time that if you can use one of these moving averages as a stop, don't put your emotion. Keep in mind an eye on the market, because it's in downtrend. You don't want to be fully engaged. And then if you have stock that let's say and I did mention this last time, if you bought it at a breakout, right, and then it was a good breakout, and then you have the 8 moving average in the stock starting to just going sideways, give it some time. But if it goes up actually and it's starting to close, and you have the 8 moving average coming here, and then it's starting to close right below that 8 moving average a day or 2 or 3. For me, that with experience, it shows me weakness, because the stock, most of them, they keep going up, and they respect most of the time they will respect the 8, and then they will respect the 20, the 21. So these are kind of a couple tips. I hope they really helped you. If you find any value in this video, give me a thumbs up, subscribe if you haven't yet, and I'll see you soon. Bye bye.